The SBA TD Financial Literacy Series brought to you by TD Bank, Prospera, and the United States Small Business Administration. My name is CJ Castro. I'm the Senior Area Manager for the Tampa area. Joining me today is Ana Castilla, Vice President from TD Bank, Jose Aguinaga from Business Development Consultant from Prospera, and Lani Koyama from the SBA Lead Economic Specialist from the South Florida District Office. Please note that this is an educational session and not for attribution. Reporters can contact the closest district office for any interviews. In the event of any inconsistencies between this presentation and other official guidance released, the official guidance governs. So let's go over a few housekeeping rules. If you're having any technical issues seeing the slides, try to exit your current browser and re-enter using Microsoft Edge. During the presentation, you can submit your questions in the chat and we'll answer them at the end of the presentation or during the presentation. A PDF of the slides will be emailed to you by the end of the day. Please remember, these are for personal use only. We hope you enjoy this training and connect with us through email and social media. We'll provide you our contact information at the end of the presentation, and thank you for joining us. First up that we have is Ana, please.
Great, thank you, CJ. It's a pleasure to be with all of you here today. This has been a really great series that we've created with the SBA and with partners in our community such as Prospera and Ascendus. Today's topic is going to be talking a little bit about inflation and how inflation impacts your small business. We know that both individuals and businesses have been dealing with the impact of inflation for several months. So what we're going to do is just talk through a couple of tips and things that you should probably consider as a business owner. Lonnie, could you advance to the next slide? So I think, as a matter of introducing this topic, inflation touches every aspect of the economy and it affects all of us, and both as individuals and as business owners in very different ways. So one of the things that we're going to be discussing today is how important it is for you to really get to know the details about your operations and your profitability, and to always be continuing in terms of our business plan components, such as looking at marketing strategy, looking at your management team, analyzing the market and doing research, how important that is so that you can stay on top of and stay ahead of different conditions in the economy, such as inflation. We're going to talk a little bit about why and how your business might be affected and how you can prepare for inflation's impacts in your industry, with your customers and your workforce. We'll discuss some business solutions that mitigate the impact of inflation and that can have a real positive operational benefit for your business long term. And we're going to include a discussion today about financial management and tools in your business plan, such as financial statements, and how useful these are. Not only are they items that you should be keeping up to date for your business, but how useful they're going to be in analyzing different conditions and how they're impacting the business. Lonnie, next. So let's start by saying, what is inflation, right? Inflation is a number that we see published in papers or referred to in the nightly news. Inflation is a rise in prices that can be translated into a decline in your purchasing power over time. So what that means is, obviously, we're seeing that prices are rising in the marketplace, and that means that our dollar can buy less, right? The rate at which the purchasing power drops can be reflected with an average price increase of a basket of selected goods. Usually when we're looking at inflation, we're referring to the CPI, which is a consumer price index. The CPI measures an increase in product prices for a set list of products. And excuse me, in my On my screen, I've lost the presentation. Okay, just want to make sure that everything was still all right. So, there's different things that might not be in the CPI basket. For example, gasoline and some other items that we know really affect our purse, right? Our wallet. But for businesses, the CPI might also not be the best measure to keep track of inflation for your individual business operations, because what you're buying and the price for the goods that you sell might be changing at a different rate. So the rise in prices is often referred to as a percentage. It's expressed as a percentage. And it means that a unit of currency effectively buys less than it did in prior periods. Usually we will see that inflation is reported either month over month or year over year. So when you have an inflation rate referred to in the news, in most cases, they're talking about the monthly inflation rate. But we also, from an economic perspective, look back at what inflation was at the same time last year. And some of this, in some markets and industries, there can be some seasonality that filters into that. So these are all things to keep in mind. Next, please, Lonnie. I am not seeing the next slide, but if the next slide is up, I'm going to continue. So let's talk a little bit about how inflation can impact a business, right? Depending on a variety of factors, your business, and this can include your location, your geographic location within a market. It can also be affected by weather, a number of different factors, but let's talk about a few of these fundamental factors that we want to consider. One is that if you sell essential goods and services, or if you're an essential provider of goods and services in a market, you might have little competition, and you may tend to have less issues even as prices rise. So this we definitely see with gasoline, right? Gasoline goes up, we all still need gasoline. We might do a little shopping around, but it's cents on a dollar difference between one vendor and another. So what we might do is when you look at the second bullet is we might then change our use of gasoline, right? We might change our transportation behavior because it is costing us more to fill up the tank. So think about this also for grocery stores, for example. You might have staples, such as we've been looking at eggs, the price of eggs that have gone up considerably. It may be that grocery stores are going to be seeing a decrease in their sales of eggs because the price has gone up so much, but probably milk is staying pretty stable, even though it has been increasing incrementally. So this is why really knowing your products and services is so helpful to you, so that you can see exactly where inflation is impacting your individual business operations. Every business should be reevaluating its business plan and its operating model when significant market conditions change. This actually, another example of significant changes in market conditions was companies that did a lot of shipping. The price for shipping, especially if you were moving things via freighters, those costs escalated significantly about 24 months ago, almost doubling in some cases. So any kind of freight company, anyone that was depending on delivery of items, that delivery cost was probably the first sign that you were going to see an increase in costs across the market. That was not necessarily just an inflation issue, but because of the pandemic and some changes in the infrastructure for deliveries, all of that had the impact in the high cost of delivery and also the delay in delivery, right? which had an impact in your ability to stock up inventory and to meet sales conditions. So these are all things that can impact each business in a different way, and you must consider not just what's happening generally in the economy, but what the actual real impact is on your operations. As we talked about in our last session, a business plan, includes everything from a discussion of your products and services to a description of your market and market segments, a description of your competition. These are all elements that you need to be staying on top of on a regular basis to make sure that your operations and your business strategy are up to date and are taking into consideration the ecosystem in which you're operating. And then for some businesses entering the marketplace with a unique production or pricing or distribution model, they may have a competitive advantage. So we've seen that delivery of items, incorporating delivery to customers is something that is giving some organizations a competitive advantage. Also being able to track repeat orders and stimulating repeat purchases is something that is helping some businesses as well. Next, please, Lonnie. So when it comes to business operations, let's talk a little bit about how inflation can impact different elements of your operations. Obviously, there are going to be higher costs for raw materials, utilities, wages, and wages is one that we'll come back to in a moment. But all of these higher costs, although there is a stated inflation rate in the market, you may see that the cost of raw materials escalates at a different rate for different types of materials, right? And you add into this the shipping and delivery of them. From a wage perspective, we know that it's not only difficult to keep great employees, but we know that many businesses are finding it difficult to hire qualified and suitable employees for positions that they have open. So this has been putting a lot of pressure on businesses, not just a small business, but even large ones, in order to stay staffed. You will have higher revenue, right? Because you've probably been raising your prices to keep up with the impact of inflation, but you want to do this selectively and in a really strategic way so that you are staying within competitive margins. That means you're still competitive with your direct competitors in terms of your pricing. And you also want to think about, am I raising the prices adequately for an individual product and service instead of just increasing a certain percentage across the board? There is going to be falling demand depending on the products and services that you offer. If they're essential, you may not see as much impact. If they're not, if they're discretionary, like if you run a massage, service, a day spa or something like that, you might see that people are cutting back a little bit on their pricing. And there's also the impact of substitution, right, in terms of your competitors. So really being able to track your falling demand, and especially by customer segments, is going to be very helpful to you in developing strategies that are going to be more responsive to what's happening in the market. A lot of businesses are being very challenged right now with inventory management. And, basically, it would be nice to secure higher inventory before the cost of supplies goes up, but then you're faced with the price of storing the inventory, right? Keeping the inventory somewhere. Some developers, for example, last year purchased a lot of air conditioning units and heating units for development of apartment buildings, because there was such a kind of a lack of supply. and a long term in terms of delivery. So they had to have all the units on hand if they were building a new project. Well, that turned around. So now there's a lot of developers that are sitting on stored HVAC systems that they can't resell. So it's really important to think ahead and think through how it is that you want to handle your inventory costs, your inventory timing, and looking at securing inventory at current pricing. If you look at historical trends of how pricing has increased for certain supplies that you need, and you can look at, was the increase due to delivery costs? Was it due to general inflation in the market? Is it due to a loss of suppliers in the market? So if there's less companies supplying a particular product, it may be that the cost goes up because they can demand a higher price. So looking at why it is that your inventory is costing more and alternatives for how you can manage it is a really important process. Supply chain distribution, we've talked about, the problem with some vendors leaving the market or stopping their sale of particular products. We've talked about just the distribution delivery time and the lag that we were experiencing in that capacity. But also, you can look at diversifying vendors. If your prices are going up with a vendor, maybe this is a good time for you to start shopping around and finding even a local vendor that might be able to supply a product or service. The economy is always changing, right? So you might have new purveyors that have opened up shop in your local market or local geography that may provide a little bit of a cost savings to you. Interest rates, as we know, are on the way up. Another increase from the Federal Reserve was announced today. So that means that older debt that you have on your books is cheaper for you. Chances are that the interest rate that you're paying on that older debt is less than what any new debt will be. So for some businesses, they have decided to slow down their repayment of some of their older loans. So that they can, they're still meeting their required payments, but they're slowing down the amortization so that they can redirect their current funds to meet other needs within the company. And then in terms of equipment values, and this goes for rent as well, some companies are finding that it makes more sense to purchase a location or to purchase their leased equipment. And that there might be a good value in that right now. Next, Lonnie. So I think that this is where we want to highlight, what is it that what tools do you have in the company that you can use to better analyze the impact of inflation and other economic conditions on your business? And what we found, for example, when we started addressing or responding to the effect on small business from the pandemic, was that many small businesses didn't have an updated business plan and didn't have updated financial statements, so that they could apply for the PPP lending and other programs. So I think that what we want to underscore when we talk in this particular presentation is not just about access to funding, but the real practical use of maintaining updated financial records in your business so that you can analyze and pinpoint what changes you can undertake that will increase your profitability, right? Or mitigate losses. So it's really important to keep your financial reporting up to date, to track your operating trends closely. You just want to know, are your sales increasing over time? By how much? You want to know what your accounts receivable and accounts payables dates are. You want to stay on top of all of the metrics for your business. And you can boil this down to individual products and services that you offer as well. The better you understand this information, the better you're going to be able to negotiate terms with investors or lenders or even with suppliers. You can refer to your historical financials, to see where the budgets and projections may have veered off. Even not talking about the inflation and other kinds of market conditions, many businesses put together a business plan and some sales projections and financial projections to start the business, and then fail to come back to the projections, maybe in 6 months' time, and then at least annually, but we suggest quarterly, looking at, are you operating in line with your proposed budget and with the projections? And if you're not, what is it that you need to address so that you come back in line? Sales performance can help you identify developing trends also. So if you're seeing that there's an increase in a particular product or service that you're selling, and it's growing at a pace that is perhaps double what other products and services you have are, it's not just a matter of capitalizing on that and leveraging that you're increasing sales for that product, but really understand what's driving that increase in sales. Is it because you are monopolizing or really capitalizing on a market segment where you have an advantage? Is it because you have an operational competitive advantage in terms of how you produce or deliver the product? You really want to understand what is it that you're doing right that is creating these conditions. Is it something that you could transfer to other products and services in your business? And, in terms of why is it that you're doing so well, that's really going to underscore what is it you want to protect in terms of how you're operating the business and the market segment that you are working in, because it is generating higher sales for you. So you want to make sure that you're very focused on being able to maintain that competitive advantage. And then you also want to think about evaluating every product and service for profit given current factors. Some businesses have decided to just sunset or hold back sale of a particular product or service for a certain period of time, given market conditions. Some have decided to eliminate it completely. If you were looking at venturing out into branching into a new segment of the industry, in a time when interest rates are going up and inflation is high, you might want to reevaluate your business plan and your financial projections just to make sure that any type of expansion or purchase of another business makes sense. Next slide, please. Okay, so banking and finance considerations. This coming from TD Bank, I guess that this is one area where we have a lot of discussions with our business clients. The first thing to underscore is how important it is for you to really maintain a focus on your personal financial position. As a small business owner, you know that your personal financial position and your credit worthiness are very important to the ongoing financial stability of the business and your ability to access lending and other products that you need. So at the same time that a business is being impacted, your household is being impacted by inflation. So you want to keep an eye on your credit score, on your credit report, keep an eye on your budget, and make sure that you are fundamentally supporting your business operation as a business owner. We also are suggesting that everyone increase their vigilance on potential fraud. Unfortunately, we're seeing that through technology, there is a lot of fraud that's being perpetrated, and many financial schemes that are targeting not only individuals, but business owners. Obviously, financial institutions put a number of different measures in place to try and catch fraudulent transactions. but we really want to make sure that our business owners and our individual account holders also stay very alert in terms of fraudulent attempts to access their accounts. If you see something like that that's suspicious, the best thing is to reach out to your financial institution immediately just to confirm transactions. And I've had, personally, I've had the example of things that I have purchased and paid for with a credit card, and the credit card charge comes in under a completely different company name. So unless I can match the date and the amount in my mind, sometimes I have called to question charges I see on the credit card just because I don't put two and two together when I see the name of a different company. Obviously, financing a purchase versus continuing to lease may be a good long-term investment. And here I'll specifically talk about many small businesses that have escalating rent and lease payments that are due and are considering purchasing a property now to operate their business from. This can be a very good decision for some small businesses, and it lends a lot of financial stability to the operation. Because we have the SBA as a partner in this workshop today, I will mention that there is a specific SBA product called a 504 that can make the purchase of a business location more accessible and more profitable for some business owners. The other thing that we really want to focus on is that if you are on top of your business operations and your financials, and you're predicting or seeing that you might have a need for financing in the future, or you want to talk about maybe a business credit card versus a line of credit, different solutions for needs that your business has. The best time to talk to a banker is before you have a need, before you're up against needing to finance purchases of inventory or other items. So the best thing is for you to get updated financial records for the business, have a very good idea of why you're going to need some funding in the future, and reach out to the banker, to your banker, before you have an extreme need for funding, to make sure that you set up a line of credit or a business credit card or whatever you might need while the business is still in a healthy position. It is more difficult once you start incurring losses or your profitability has been impacted. It is more difficult to approve a business under those conditions for financing. So if you can think ahead to what it is that you're going to need to maybe hold you over seasonality or other impacts that you're projecting for the industry, you should talk to the bank now. And then I also want to mention that banks offer more than just deposit accounts and financing. Yeah. Many banks offer accounting solutions. For example, I know TD has a product that helps you manage accounts and also allows you to bill clients. So if you can automate some of your operations, this is something that's going to help you stay on top of the financial responsibilities in the organization, save you some money, and also create reporting for you. Next, please, Lonnie. So let's talk about a few tips for dealing with inflation specifically. The first is to really focus on productivity. So managing your workforce expenses, as we mentioned earlier, can get tricky as wages generally rise during inflation. This is not only because, individuals are being faced with the impact of inflation on their household budgets as well, right? So many individuals may look to move to another employment opportunity that offers a higher wage. So there's some value to an organization, a business, kind of thinking about how they might be able to retain their workforce. Maintaining a workforce is more cost effective than having to train and hire new individuals. You have the benefit that you have individuals that are not just trained but experienced, and especially if there's someone that you are happy with their work ethic and their performance, it's of value to the business to be able to keep them on. Sometimes people are really focused on what is my wage per hour or my salary, but there are other types of incentives and benefits that can be given to an employee that might also entice them to stay with a particular business. Some of those, of course, include, changing hours, being more flexible with hours, maybe restaffing the workforce into different types of groups and teams, so that you're taking a little bit of pressure off of some of your top performers. Management opportunities, if you think that if your sales are growing and you're going to bring on new staff, there's an opportunity to promote someone. So I think that many businesses are facing that challenge of really trying to retain an effective worker. But it really behooves you from a strategy perspective to think about this upfront, to think about this early, because you don't want to be faced with an individual that says, I've been offered this at another company, I'm going to go, and then start to negotiate. Many businesses find it very effective to stay in touch with their employees and see where sentiments are and what types of incentives and benefits can be provided to keep their workforce happy. The other thing that you want to do is obviously retain customers, right? People are out there looking for the best price for things, and sometimes in an inflationary period, customers are very focused on price and not so much on quality and dependability of a product or a relationship. So maybe you can take the first step in emphasizing to customers how important it is to you to keep them as a customer. Maybe look at increasing prices with a real focus on the price per product or per service, understanding how higher costs are impacting that particular item. Versus just implementing an increase in costs across your portfolio or your entire products and services that you offer, right? You can also look at providing some type of package pricing, some type of recurring pricing discounts. You might be able to offer customers longer payment terms, depending on the nature of your business. So try and think creatively about what you can do to keep your customers happy as well. And when it comes to cash flow management, in a time of inflation, this is going to be really important. So again, here, this is where automating accounting and scheduling out payments may leave more cash on hand for unexpected cost increases. So using different tools, some businesses have QuickBooks, but they don't really use all the features in QuickBooks. Some of these services are going to be very helpful for you to stay more on top of how inflation is impacting the different elements of your business. I know that now what we'll do is have Lonnie go over the SBDC and SBA support for understanding the importance of financial statements, and then Jose from Prospera is one of the partners that TD works with in the market that works with businesses and provides consulting services and information on training to manage some of the accounting softwares and different practices. The slide deck that you'll receive from TD has a page with information on our online Small Business and Personal Financial Learning Center, and my contact. And you can go to tdbank.com to access more information on different education modules and information for the business. Thank you.
Thank you, Anna. That was very informative. CJ, did you have something to say?
No, just I'm not sure who's gonna go next. I thought it was Jose.
Jose, you ready to go, or do you want me to go? It doesn't matter to me.
Up to you. Up to you. Doesn't
Uh,
matter to me.
All right. So we have a lot of I have a lot of content to cover, and so I'm going to go through this rather quickly. One of the things about the reason we're doing this particular session is this is the tail end of Financial Literacy Month. So April was Financial Literacy Month. So one of the things that the SBA wanted to do is help get you educated on your financials. So we're going to talk about that. Anna talked about financial management and how important that is. One of the things I've learned in my years working with small businesses is that all of you small business owners know your trade, whatever it is, whether you're a landscaper, or an accountant, dentist, whatever it is, you know your trade really well. But the people that I've seen that hit the home runs, the ones that become millionaires, are the ones who learn their financials. So that's one of the critical things you have to learn. Not only learn your trade, you have to understand financials if you want to succeed and hit the home run. So I'm going to be talking about financial management and learning financial statements. I'm also going to show you how to read your financial statements, some of the more important ones. Anna, at the bottom of this slide, Anna talked about a lot of the stuff and how to respond to inflation. So that's a big part of how you combat inflation, is how you respond. So she mentioned financial management. She talked a little bit about cash flow. I'm going to get into that in more detail. And I'm also going to talk to you about increasing your sales and how to increase your sales, because that's one of the major ways that you combat inflation. So let's talk about financial management. What is it? It's a way to know if you're making a profit. Financial management helps you decide what you could afford in terms of store, office location, inventory purchases, employees, and equipment. Effective financial management gives you tools to chart your course into the future, adjust your direction when needed, and help you find your way through challenging times. So one of the things related to this is budgeting. So you may not be used to budgeting. On a personal level, all of you have budgeted on a personal level. You know, you only have so much money coming in, you know, you have so many expenses that you need to take care of every month, for food, for your either rent or mortgage, for your car, for gasoline. So you've been doing it on a personal level, but I encourage you to do it on the business side too. When I worked in corporate America, we were always involved in creating budgets and sticking to the budgets. In most businesses, payroll and wages is the biggest expense. That's true for almost every company out there, including the federal government. So really managing your payroll, it can be a huge factor. But as far as budgeting, you need to look at projecting into the future and looking at what are my sales going to be, what are my expenses going to be. And if something's off, if your sales aren't quite what you expected, you need to make adjustments so that you stick to your budget and then you don't put yourself in a financial pickle. Okay, one of the most important things related to financial management is bookkeeping. It's a critical component of financial management, organized process of tracking all income and expense transactions. Back in the old days, bookkeeping was done by someone outside of your company. One of the great things about these days is that bookkeeping can be done in-house. There are even free accounting software programs that are out there. The most popular one, not free, but the most popular bookkeeping program out there is QuickBooks. And one of the good things about QuickBooks is that there are a lot of tools, there are a lot of tutorials, there are a lot of YouTube videos on different tricks you can use to help you with QuickBooks. Let me share a quick example. There was a company I met, they were from Lakeland, Florida. And I didn't know this before, but Lakeland, Florida is the tropical fish capital of the world. I didn't know that until I met this woman, this young woman. She and her father run an aquarium or an aquatic fish farm in Lakeland. And she said they had always used QuickBooks, but they had never learned all of its functions. So she went to a QuickBooks class. And after going to the class, she learned how to break out all the different categories of sales that they had. So basically they sell, I don't know, 10 to 20 different types of fish. And so they broke it out by category. One of the things she learned, though, is the number one sales category of fish was a loser. They were losing money on that. And she had never known that before. Even though it generated the most revenue, it was still a loser. So she and her father made the adjustment of changed the price on that one particular fish. And even though sales went down on that particular fish because people weren't getting it for the cheap price anymore, sales went down, but their profitability went up. So think about that. How can your sales go down and yet your profitability goes up? It's when you monitor your margins and you monitor your gross profit on those products, and you're looking at your financials, that's one of the things you're going to learn. So here are 10 basic bookkeeping steps. First, obtain business accounting software if you haven't already done that. Obtain a separate business checking account. So you want to keep your personal and business separate. Reconcile your checking account, even if you don't do that on the personal side. Track all of your sales. Deposit all of your sales. So again, you have a separate business checking account. Do set the stuff up in your separate account. You may want to shop around as far as that separate business checking account. They're not all free. Sometimes it can be expensive. So shop around to try to find an inexpensive business checking account. Number 6, write business checks for business expenses. Obtain a separate business credit card if you can. That's one of the fastest ways to set up to get business credit and to help your business credit rating. Pay business expenses first, again, from your business account. Generate and use a profit and loss statement. I'll talk about what that is in just a minute. Pay yourself with an owner's draw. So when you first set up your company, you're not going to be able to pay yourself a salary. Your company's not going to be profitable, so you're not going to be able to do that. Let's talk about financial statements. So the typical financial statements are these first 3 at the top. An income statement, also known as a P&L, also known as a profit and loss statement. A balance sheet, statement of cash flows. So I'll show you right now how to read all 3 of those. Others that may be important: accounts receivable, aging summary. So what that is, accounts receivable are monies that are owed to you. So when you allow people to pay you later, 30, 60, 90 days down the road, the monies that are owed to you are called accounts receivable. And I encourage you that if you're not good at collecting money that's owed to you, don't go into business. You have to be able to collect your accounts receivable. So your accounts receivable aging summary says how good you are at collecting from the people who owe you. Your accounts payable aging summary says how good you are at paying your vendors and people you owe money to. One of the great things, there are thousands of great things about our country, but one of the great things about our country is generally accepted accounting principles, also known as GAAP, GAAP. So one of the great things about GAAP or GAAP is that all financial statements in the United States are formatted the same way. What that means is you could look at a P&L from Joe's Diner or Susie's Alterations or Walmart or Amazon, and they're all formatted the same way. So I'll show you in just a minute how to read a P&L. Let's talk about cash flow. Cash, well, Anna talked about this a little bit, but cash is the blood of your business. You never want to run out of cash. So a cash flow projection is a financial statement using assumptions to forecast company cash flowing in and out, future cash during a specific period of time, project whether cash receipts or inflows will be sufficient to cover projected cash disbursements or outflows. So you do this on a personal side, you do this all the time because you're monitoring what's going on with money coming into your checking account at home. You're monitoring what's going on with all the payments that you're managing, your rent, your groceries, all that other stuff. So you're managing cash flow on a personal side, but you really need to manage it on the business side. So this is a sample of a cash flow projection. I apologize, you may not be able to read this very well, but on the top of this, it shows all the sources of cash, different of your into your business on the top, starting with your getting cash, loans received, equity contribution. That would be if you were to sell off shares of your company or stock in your company and money flows in. In the middle, operating uses of cash. Those are all different expenses and different ways cash leaves your business. And then at the bottom are other ways that cash leaves your business, such as debt service, like paying off a monthly loan, equipment purchases, tax, owner's draw if you pay yourself, inventory purchases. So in the beginning, you have your starting cash, you have a cash flowing in and out, and then you have the ending cash. Then you go into the next month and you have cash for the very next month. So this is a projection looking into the future. So you have cash again flowing in and out of the business. So this is basically a 3-month projection looking into the future of how cash is going to flow in and out of your business. And this is really important because again, you never want to run out of cash. Different things hit you at different times with your business. So you really need to manage how you're using the cash. One of the big mistakes some people make is they pull money out of the company too soon. They do that owner's draw using bad timing and they pull it out too soon and they find that they're short on cash because their timing wasn't right. So this is really important to do the cash flow projection and look at what's going on with your company. All right. Strategies for creating positive cash flow. So this is really important from the perspective of fighting inflation. One of the things that happens when inflation goes up is that most of your expenses are going to go up. All of the different vendors, suppliers, everyone is raising prices. So it's really important for you to monitor your cash flow because your cash flow is being impacted in a dramatic way by inflation. So what can you do? Number one, improve your sales skills. I'm going to talk about this in a couple of other slides here, but improving your skills can have a huge impact on your company and on how you fight inflation. Number two, increase the number of items sold, which kind of goes to number one. You already have your current customers, but if you could sell them additional items, when I was in sales, it was called related sales. So anytime you're selling something, you try to sell something related to what they're buying. Let me give you an example. Car business. What did the car dealers always try to sell you? An extended warranty. Doesn't matter whether you're buying a new car or a used car, they always try to sell you an extended warranty. So for a car dealer, an extended warranty is a related item to what they're already selling. So look at different things that you sell and what are things that you could sell along with the things you're already selling to your customers. Number three, increase the price. Anna talked about this. Don't be afraid to increase the price. When I was in business, I used to monitor my competitors all the time to look at their pricing. And I was never, the company I worked for, we were never the low price leaders. We were always competitive, but we were never the lowest price. So focus on values. Complain about the price and you need to show them what the excellent value you're getting for the price that they're paying you. Number four, reduce expenses. So always take a look to see what you can do to reduce expenses in your operations. Change the timing of expenses. Sometimes you get clobbered with several different major expenses at the same time of the month. Most vendors, most suppliers are willing to change the timing to get you to pay on a different time of the month so it doesn't impact you all, so you don't get hit with bills at the same time. Number six, save money to have sufficient opening cash to get through the startup period. So that's all about budgeting, all setting aside money so that you don't run out of cash. Number six, sources of cash other than sales. For example, a line of credit from one of your vendors or suppliers. If you can get a line of credit with little to no interest on it, then fantastic, go for it. Number seven, reduce or change the timing of your owner's draw. I talked about that one already. Buy inventory from a vendor at a lower price. Don't be afraid to negotiate with your suppliers or vendors about pricing. Don't be afraid to shop around for better pricing from different suppliers and vendors. Obtain a credit from your vendor. I kind of talked about that one already. Again, if you can get credit from your vendor without having to pay interest, fantastic. Establish a policy to get paid sooner by customers. If you can get your customers to pay cash up front, you need to do that. You need to look at your industry. Different industries are different, but in some industries, that's the norm to get paid 100% up front. But anytime you can get paid sooner by your customers, you want to do that. And again, if you extend credit to anybody, don't be afraid to collect what's owed to you. These particular items here I pulled off of an article I saw a couple of months ago. How to improve your receivables, offer discounts, incentivize customers who pay early. You can offer 1 or 2% discounts for early payments. Make sure this is explained in the invoice. Charge a fee for late payments. Ensure this is explicitly explained to your customer. Be courteous. Courtesy goes a long way. Recent study found that adding thank you and please to your invoices increases your chances of getting paid by more than 5%. Let's talk about the profit and loss statement. So what is it? An income statement, also known as a profit and loss, also known as P&L. Those are all the same things. They have 3 different names, but they all the same thing. A profit and loss statement measures revenues and expenses over a period of time, tracks profitability, whether the business is making a profit on what it sells. By the way, I think CJ talked about sending out a copy of these presentations. If you can, CJ, can you put my email address in the chat? And folks, if you look at the chat, send me an email. I will send you a copy, a PDF copy of this presentation as well as TDs. All right, so this is the basic format for a profit and loss statement. And again, this is formatted the same for every company in America. So at the very top, you're going to have your sales revenue. Usually a profit and loss statement gets spit out every month for most companies. So oftentimes they'll spit out one a month and then they might do a year to date. So the month of April just ended. So if I was, for a lot of companies, they're going to create a profit and loss statement for the month of April, and they'll also create one for year to date, which would be January, February, March, April, for the first 4 months of the year. Not all companies have a fiscal year that starts in January. So that's something you may want to talk to your accountant about, because for some businesses, you're better. You can be a tax by changing your fiscal year starts. For example, the federal government starts in October and it ends in September. Anyway, back to the profit and loss statement. Again, same format for all profit and loss statements. You're going to have the sales. Then you're going to track cost of goods sold, and that's going to give you your gross profit. And at the very bottom, you heard the term margin probably. So gross margin is gross profit expressed as a percentage. So I'm going to give you examples of all this stuff in just a second. So from gross profit, is that the gross profit? Is that the money you stick in your pocket? Unfortunately, no, it's not. Then you have to subtract all of your expenses, and then you'll end up with net profit, which hopefully is the money you're going to stick in your pocket. So let me give you an example of a profit and loss statement. So, let's say you go into Walmart, buy a pair of Levi's jeans. So we're just talking about one item from Walmart. So the sales revenue on those Levi's, I don't know what Levi's sell for. Let's say $30. That could be totally off on that. But let's say you go into Walmart, you buy the jeans for $30. Sales revenue that goes to Walmart. And Walmart has to subtract their cost of goods. What did they pay for those Levi's jeans? And Walmart has more buying power than anyone in the planet. So let's just, for this example, let's say $15 for that pair of jeans. So revenue was $30. The cost of goods was $15. That means the gross profit on that pair of jeans is $15. So is that the money that goes to the shareholders? No, it isn't. So from that $15 that they got for gross profit, then you have to subtract all their expenses, which include wages, rent, utilities. For a store like Walmart, they probably have 40 different expenses, on and on and on. And then you end up with net profit at the very bottom. So that's the basic format for profit and loss statements. So here's an example from Larry's Landscaping and Garden Supply. And in this example, on the very top, again, I apologize, you can't read it that well, but on the top, you see his fiscal year starts in October and ends in September. So he has a different fiscal year. On the very top, though, it's go down to total income. So that's his sales revenue, $65,698. That was his revenue for the year. Go down a couple of lines, you'll see his cost of goods, 4,220. Why is cost of goods so low? Because his is a service company. So sometimes service companies have little to no cost of goods. If he was a store selling products, then his cost of goods would be a lot higher. Anyway, so his gross profit for that year, $61,478. Then from that, you take out all of his expenses. And for every company, even the smallest company out there, is probably going to have at least 10 different expenses on a monthly basis. So you take all of those expenses out, you'll end up with net ordinary income, subtract other expenses, and then at the very bottom, you'll see his net income, also known as the bottom line. So for his company, bottom line is $14,740. So now you know how to read P&Ls. Profit and loss statement, what is it? It shows how successfully the buying and selling process has been managed, measures the ability of your business to grow, repay debt service, and support you. The P&L is the most important report from your accounting software program. So P&L is very, very important. I've got a question for you though. Can you be profitable on a P&L and still go out of business? And the answer is yes, you can. And one of the ways, there are different ways that can happen, but one of the ways that can happen is maybe you have lots of sales and you have and on paper you have lots of sales revenue, but you also have lots of accounts receivable, and maybe you're doing a terrible job of collecting, so now you run out of cash. So it's possible you could go out of business by running out of cash, even though your profit and loss statement says that your company is profitable. Moving on, here's another financial statement. It's called a balance sheet. The reason it's called a balance sheet is one side equals the other side. So on the left side is assets. Assets are everything that you own. On the right side, you have liabilities, which is everything you owe, and then shareholders' equity. So another way of looking at this is from a math perspective, is you could take your assets, subtract your liabilities, everything you owe, and then you'll end up with your shareholders' equity. So you can do this on a personal level too. On a personal side, instead of shareholders' equity, it would be your net worth. That's how much you hear about people with a high net worth. People like CJ, they have a high net worth or high equity. So a millionaire is someone who has a high net worth or of over $1 million. So a balance sheet is a financial snapshot of what assets, liabilities, and shareholders equity are at a specific moment in time. So one of the things about the balance sheet is it changes. It can change every single day because you have money flowing in and out. You have people paying their accounts receivable. You have sales going out. Different ways money is flowing in and out. So balance sheet changes all the time. One of the things you want to have happen, though, is you want to have the equity in your company grow as time goes on. So here's an example of a balance sheet. This is for a consulting company. So if you look in the bottom, you'll see total assets, bottom left, total assets, $101,000. So that's everything that the company has going for it, including cash. You see, that's their biggest asset, $85,550. That's their biggest asset. So assets on one side, and again, on the bottom right, it balances 101,000 on both sides. So on the bottom right, total liabilities and shareholders' equity. In this case, if you go up a couple of lines on the right, you'll see their liabilities, the amount of money that's owed by this company is $16,000. So if you take 101,000 minus 16,000 liability, that leaves them with total or retained earnings of $85,000. So that's how much. That's one way of looking at how much this company's worth. So now you know how to read a balance sheet. Importance of a balance sheet. This financial statement lists everything a company owns and all of its debt. A company will be able to quickly assess whether it has borrowed too much money, whether the assets it owns are not liquid enough, or whether it has enough cash on hand to meet current standards. So when you go to talk to your banker to go get that loan, they're going to want to look at all your financials. You want to look at your profitability. They're going to look at your balance sheet, and they're going to want to look at your cash flow to make sure to for that $100,000 you want to get. about sales for just a second. This is just a quick and dirty about how to become a better salesperson. So number one, write down the features and benefits of each of your products or services. So everything you sell, it doesn't matter whether you sell products or services, every one of those things has a feature and a benefit. Your customers are paying for the benefit of that particular item. So it doesn't matter whether it's a car, a couch, a software program, everything you're selling should have features and benefits. And those are the things that you're going to pitch to your customers, particularly the benefits of each of the products and services that you're selling. That's what the customer is buying. Those are the things that add value. And the more value that you deliver, the more you can charge. Number two, identify the objection you will come up against during your sales pitch. So with doesn't matter what you're selling, you're going to have objections. You're going to have people that tell you the reason why they can't buy it. And usually those are the same things that come up over and over and over again. So you're going to want to have a reply. You want to have a solid reply for when those objections come up. Not only that, but when you go to train salespeople working for you, you want to teach them about how to overcome it. And you offer verbiage on how to overcome those objections. And as it says, practice or role play overcoming objections. So one of the things you want to do is coach people for you on how to do that. And when you see other people, that's one of the things they do. Number three, build your sales pitches, put it all together. There's a lot of great YouTube videos about how to do sales. When the topic of price comes up, focus on value. So that's something I mentioned earlier. People always have to perceive that the value they're getting is worth far more than the price. And so that's one of the things that you need to do. And then lastly, close the sale. Get the customer to commit. So here's a link right here to one particular YouTube video about closing the sale. Another thing related to sales is an elevator pitch. So you may or may not have heard of an elevator pitch. That's when you're talking about your business and you're pitching your business. It's a short sales pitch about your company, the benefits of working with you. Tell me about everything about your business in 30 to 60 seconds. And again, at the bottom of this slide, here's several different videos about how to develop your elevator pitch. If it were me and I was in business, I'd have some cheap business cards. And the reason they would be cheap is because I would be giving out so many of them. And I would tell everybody what I did. I would be like the guy, Johnny Appleseed, out there planting seeds and telling everybody about my business. The SBA is doing a sales class with SCORE. And here's a link to that sales class. And it's coming up in, what is that, 2 weeks, 3 weeks? So there's a link to that. Again, if you want a copy of this presentation, send me a PDF, or I'll send you a PDF copy of it. All you have to do is send me an email. So in summary, these are the things that I just talked about and Anna talked about too. Financial management, understanding your financials, manage your expenses. These are all different ways to fight inflation. Increase your sales. Get expert advice. We didn't talk about this, but there are several entities that the SBA works with, including small business development centers. The SBDC network in Florida is the largest SBDC network in the country, and they work in every locale in Florida. There's also SCORE. SCORE has numerous chapters throughout the state of Florida. SCORE is a group of volunteer mentors who can help coach you with your business to help you grow your business. There are also women business centers. There are 4 of those in the state of Florida. And bankers are a great resource to help you with getting advice related to business. And then there's a lot of online education, some really good information online to help smarten you up on business. I am talked out. Jose, I'm turning it over to you.
Thank you very much. I wanted to congratulate you. Really great presentation. I really love the topics that you cover. So let me turn up my camera right here so you guys can see me. And you guys have my contact information. My name is Jose Aguinaga. I'm a business development consultant. You guys have a phone office and my personal email. Let me share with you guys my screen so you guys can see my presentation. You guys seen the? Are you guys seeing the?
It's showing.
Yes.
Okay, 1 second. There you go. Okay. So yeah, before I get into Prospera, I wanted to talk a little bit about myself. As I said before, I'm a business development consultant here at Prospera. My background, I have a bachelor's in mathematics, and then I went on and did a master's degree in data analysis. So very math-oriented guy, I would say. I'm from Spain. I've been living in the States for 9 years, and I've been working at Prospera for the past 7 months, learning a lot since I joined, and really loving really passionate about what we do here at Prospera. So what is it that we that who are we in Prospera, and what is it that we do? So Prospera is an economic development nonprofit organization, and we are specialized in providing bilingual assistance to Hispanic entrepreneurs. All the services that we offer are both in English and Spanish. And everybody here, all my colleagues or business development consultants speak both English and Spanish. And we specialize and we help Hispanic entrepreneurs to start and strengthen or boost their businesses. We don't make any difference if you have an idea and you come here as a dreamer and you want to implement the business that you have thought, and you, or maybe you have a business in your country of origin, right? And you want to just come to the States and you want to implement that business here in the South Florida and all the areas that we are in Florida. We help you to implement that business. And we also have clients that also have a business and they've been in business for long, and they want to, strengthen the business or boost their businesses from sales to any other aspect in terms of economic aspects. We know now that the economy is the way it is, and we have all the business owners, savvy business owners, that need to rethink what they're doing and kind of reinvent themselves. So what do we do? We work with you. We work with you to help you avoid common mistakes. We've been around for 31 years. We recently rebranded. We used to be called HBIF, Hispanic Business Trust, and we rebranded to Prospera. As I said, we've been around 30 years in Florida, and we expand our market to South Carolina and Atlanta. We have seen many of the clients that we've seen. We try to advise them, right, and help them avoid the common mistakes that someone that tries to implement a business might have a different background or come from a different country. Especially most of my clients, they come from different countries, and some things that apply in their countries, they might have been, or they might have really successful businesses in their country of origin. But when you come to the States, right, things don't apply the way that it apply in some other countries. I am the best example. When I first got here from Spain about 10 years ago, right, and didn't know about the credit and how everything worked. I remember I went to the bank, opened my first bank account, and I wanted to buy a car because I was a student. I needed my car to move, and I didn't know the credit score. What is that? How did it work? So that was some 10 years ago, and all these how the banks work, how the banking system work. It's a lot of things that we need to learn, as you explain, all the documents and how things work in the States. That is the assistance that we provide. We offer knowledge and tools so that the businesses, the business owners can feel educated and can feel that they have enough knowledge to take the right decisions. Right, at the end, as a business owner, you're always taking important decisions. So for your business, and that's your livelihood. So we feel here at Prospera that helping you taking those decisions with the most education and the most resources. We put all these resources available for business owners is what is really gonna empower the community, especially the Hispanic business owners. So which services do we offer here at Prospera? We specialize with business seminars, which are workshops and education, as I was mentioned. It's important to mention that all the services that we offer here at Prospera are for free. They have no cost for our clients. So I really recommend everybody in this, all these guests and everybody that attends these seminars, these webinars, right, to look up after the meeting is over, to look up Prospera, look for us, follow us on social media, on the website, to it's a free research. All the clients that come here, they're like, how come I never knew about Prospera? You guys are helping me so much with the business. It's a free resource. You guys have to think of us as free staff. Obviously, we have a scope of services. We do as much as we can do to help all the business owners. But yeah, going back to the seminars, it's seminars that specialize in different topics, different business topics. We know that as a business owner, there are a lot of hats that you guys have to wear, right? So from marketing, bookkeeping, accounting, and I always like to put my parents as an example. Back in Spain, they are dentists. They're both dentists and own a practice there in Madrid, where I'm from. And they've been in business for over 20 years. They're successful business owners. But at first, I remember that they might be great dentists, but they didn't know the accounting, the marketing. Now with the social media and all the new things that keep appearing, right? AI is a great example too. It's tough to keep up, right? You might be a great doctor, a great offer a great service, or have a great good to sell, but you're not a marketing guy, you're not an accountant, you're not you don't have the best bookkeeping practices. So always where my opinion is the fact that we offer this education for free for all the business owners is something that they really can take advantage, and they really should take advantage of these free education seminars. The next service that we do is we offer business consulting. As I say, I'm a business development consultant. It's individual and personalized advice. It's tailored to the needs of their business. They come to us, they sit down with us and any of my colleagues, and we go with them about the business, what the businesses need, what's the industry in which they're trying to break in, and always try to give professional advice. That would be the second pillar, the second service that we offer. The third would be access to capital. Prospera works closely with each entrepreneur to identify the most suitable type of capital or loan according to their needs. So, for example, we here with TD Bank, where we identify the needs or what could be the best products of the multiple organizations, private or public or nonprofits that are lending money, and see which is the best product and what product best adequates to what the business needs. And finally, the business development services, which are grants received by professionals that are approved and subcontracted by Prospera. We have a net of providers that have been vetted by us. They've been really specializing from lawyers, accountants, marketing people. In case we identify that these businesses need help with accounting services, they need a legal assessment, they need marketing to create to improve sales or branding, to then market that brand to the creation of the brand. We help with that. We provide, as I say, Prospera pays for those services that are subcontracted by Prospera, and they have no cost to our clients. So really encourage you guys to look for us and get to know us, and hopefully see you here at our office. So yeah, that's as I said, that's all the services that we offer. In terms of the financials, the access of capital, we do an in-house study of how the numbers are looking for the business, and then we connect to the best product that is at in the market for tailored to that the need of that business. So for me, that would be all. It's sweet and short, as I like it. I don't know if you guys have any questions, or I don't know if we will go next.
Well, thank you, Jose. A lot of great information. Thank you, Lonnie. Fantastic presentation, both of you guys. And Anna, thank you. I know she had to leave for another meeting, but it was wonderful information. Lots of resources. I encourage everyone on the call to seek us out. We have a lot of great products, a lot of great services between Prospera, TD Bank, and the SBA. We're a wealth of information. Don't be afraid of inflation. I think part of the big takeaway is don't be afraid of anything, basically. with every challenge, there's always opportunities that arise from things that are not normal, and rising prices and economic situations. There's always innovative ways of combating them. Sometimes you don't have to be the expert, but you have the resources in front of you by reaching out to us and letting us help you with those challenges in your business. Again, I want to thank everyone. I don't have any questions in the chat. That means that all the presenters did a phenomenal job in presenting their key points. And right now, I'd like to thank everyone. Lonnie, do you have any few words of encouragement in this wonderful inflationary climate?
No, thank you, Jose. Thank you, Ana, for joining us today. That's it.
Well, thank you, everyone. Greatly
Thank you, guys.
appreciated. Thank you, Jose. Thank you, and thank you, Anna. I know she's away now, but thank you again, and have a great day, guys.